What if I told you that overnight, investors around the world dumped U.S. assets like they were toxic waste? Stocks, bonds, even treasuries, all abandoned in one of the biggest confidence collapses in modern history. The reason? America's own government shutdown, leaving Wall Street blind and the global markets panicking.
Time for money, power, politics. Treasury Secretary Scott Bessent warned today that U.S. growth could take a hit, he says, because of the government shutdown.
This isn't just another political stunt. This is the moment the world stopped trusting the U.S. financial system. When the data stopped flowing, inflation, jobs, spending, traders had no compass. And in that silence, panic took over. Money fled to gold, Bitcoin, and Asian markets. The dollar, once the world's safest asset, suddenly became a symbol of danger. U.S. Treasury Secretary Scott Bessent misread the signs. Policy signals blurred as debt and deficit fears rose. Foreign holders began to rethink their exposure to U.S. treasuries. China's steady gold buys and yuan trade deals gave global players an alternative to a fragile dollar system. Is America still the safe center of global finance? There are already warnings that this shutdown will only increase uncertainty and cause lack of trust in the U.S. economy because data becomes less available to investors. The fallout was immediate. Gold spiked, Bitcoin surged, and capital flowed into Singapore, Seoul, and other Asian bourses. The dollar's reserve status is now contested. Balance sheets are reshaping in real time. Wall Street's old guard looks shocked and vulnerable. So who benefits when trust collapses? We will expose the full chain, how Trump-era tariffs, fiscal recklessness, and a paralyzed government turned confidence into flight. I will show and explain where money is moving now. If you worry about savings or investments, this matters to you. Before we go into the full details, it is important you subscribe and let's get the conversation started in the comments. Now let's get into it and see how America's confidence vanished overnight. At the start of October 2025, the U.S. government shuttered key agencies and froze the flow of economic data. Inflation updates, unemployment reports, retail spending figures, all disappeared. Wall Street, stripped of its compass, was plunged into uncertainty. Those who trade on numbers found that the numbers themselves had vanished.
It's been ambiguous. It's hard to tell what's going on because this isn't a normal slowdown where things are collapsing. This is an uncertainty stop. People don't know what to do. They're having trouble making investment decisions. They're having trouble making employment decisions. And that means every piece of new data matters.
Major funds responded almost instantly. They began dumping U.S. stocks, selling treasuries, and converting dollars into assets farther from Washington's grip. It was not a slow, cautious retreat. It became a rout. Within hours, the dollar, once regarded as the anchor of global safety, started to slip. By October 1st, 2025, the U.S. dollar index had slipped to 97.7, down about 9% since the start of the year. Investors witnessed a symbol of stability morph into a risk. Meanwhile, gold leaped toward new records and Bitcoin spiked as capital fled toward things harder to manipulate. Let's be honest, what's happening right now with the U.S. dollar is shocking. In the first half of 2025 alone, the dollar fell harder than it has in more than 50 years. From January to June, it dropped over 10%, a collapse we haven't seen since the 1970s. That's not just a number on a chart. It means your savings, your investments, and your retirement funds, anything tied to the dollar, are losing real value, and it's getting worse. Experts at Morgan Stanley are warning the dollar could fall another 9% by next year unless something drastic changes. Think about that. A tenth of your dollar's value gone. This isn't a slow leak anymore, it's a flood. Meanwhile, the rest of the world is quietly adjusting. According to IMF data, countries are cutting down their dollar holdings. The Chinese yuan and even the Australian dollar are gaining ground. Why? Because the US dollar no longer feels safe. Nations don't hold dollars because they love America. They do it because they trust its stability. But that trust is fading. Markets hate uncertainty, and Trump has turned it into a governing style. Every week brings another erratic announcement: tariff threats, fiscal confusion, attacks on the Federal Reserve. America's credibility, once its strongest asset, is being shredded in real time. Investors see it. Central banks see it. and they're quietly acting on it. China's yuan has become the biggest winner in this chaos. Beijing has been preparing for this moment for years, signing energy and trade deals that allow payments in yuan, building its own cross-border payment system, and expanding influence through the Belt and Road Initiative. Now, when traders and governments look for stability, they're turning to the country that's still delivering consistent trade growth and data transparency, not the one shutting its doors and silencing its economists. At the same time, the Australian dollar has emerged as a surprise refuge. Australia's strong resource exports, gold, iron ore, and energy, give its currency real backing, something the US dollar now lacks as debt skyrockets too. The country's steady political climate and close ties to Asian markets make it a logical choice for investors who want Western stability without American dysfunction. In 2025, Australia looks like what America used to be: predictable, responsible, and globally respected. This shift should terrify Washington. When countries stop trusting the dollar, they stop financing America's massive debt. That means higher interest rates, weaker purchasing power, and growing inflation for US citizens. It means the end of America's free ride, the privilege of printing money that the world automatically accepts. Trump promised to make America great again. Instead, his reckless governance has made investors flee, weakened the currency, and handed China an opening it's been waiting decades for. The tragedy is that this isn't just a financial story. It's the story of a superpower losing the world's trust. And once that trust is gone, history shows it never truly comes back. The government shutdown made everything worse. Important data, inflation, retail sales all went dark. Markets had no direction. The US Treasury couldn't provide updates. Investors and governments were left guessing. Imagine flying a plane with no instruments. That's what global markets are doing right now. Markets don't collapse because of bad news alone. They collapse because of uncertainty. When the signals go dark, fear fills the void. And when fear takes hold, money doesn't walk away, it runs. And while Washington freezes in silence, Beijing moves with precision. Let's face it, America is losing control of the global economy, and the numbers prove it. The Chinese yuan's share of global foreign exchange trading has jumped to 8.5%, up from 7% in 2022, according to the Bank of Finland. It may sound minor, but in global finance, that's a revolution. The yuan is now the fifth most traded currency on Earth, behind only the dollar, euro, yen, and pound, a stunning leap for a currency once tightly controlled at home. For decades, the world revolved around four trusted currencies: the US dollar, euro, yen, and pound. The yuan was excluded by capital controls and Western suspicion. But in 2025, that wall finally cracked. Its climb toward fourth place marks the first time a developing nation has challenged the Western bloc at this scale. While Washington argues over shutdowns and partisan chaos, Beijing is quietly building a financial world that no longer needs America. Across Asia, Africa, and Latin America, nations are now settling trade in yuan, not dollars. Russia, Saudi Arabia, Indonesia, Brazil, even France and India are using or testing yuan-based energy in trade deals. They're not waiting for permission. They're constructing a system where the dollar is no longer the gatekeeper of global commerce. China's digital yuan accelerates that shift. It lets partners trade directly through secure digital channels. No SWIFT, no US banks, no dollar conversions. Even under American sanctions, this network keeps trade alive. It's not just smart policy. It's a geopolitical weapon, built while Washington distracted itself with slogans and shutdowns. And the results speak for themselves. In the first 8 months of 2025, China's foreign trade grew 3.5% year-on-year to 29.5 trillion yuan, with exports up 6.9%. In May 2025 alone, it posted a $56.5 billion trade surplus, and between January and July, it imported $1.45 trillion worth of goods. Even under tariffs and a global slowdown, China's economy keeps expanding, tightening its grip on supply chains and proving that resilience beats rhetoric. Meanwhile, Beijing is dumping US Treasuries, the same bonds that once anchored America's stability. China's holdings are at multi-year lows, and it's not alone. Japan, Saudi Arabia, Thailand, and the UAE are also cutting exposure. This global trend toward de-dollarization is a preemptive move to escape a financial system drowning in U.S. debt. Where is that capital flowing? Into gold, energy reserves, and infrastructure projects across the developing world. Beijing has been hoarding physical gold, real, tangible wealth, while Washington keeps printing money and raising the debt ceiling. When trust in paper fades, gold becomes king, and China understands that better than anyone. Each bar of gold, every yuan trade deal, every digital payment corridor is a brick in a new financial order, one that no longer revolves around America. So when the U.S. shutdown sent Wall Street into panic, China didn't flinch. Its roots were diversified, its currency global, its defenses ready. And as Beijing offers something the West no longer can, stability, structure, and predictability, the world is starting to listen. But while China builds new foundations, global investors are already searching for safety of their own. Gold and Bitcoin have surged in recent days, and the timing is no coincidence. As America sinks deeper into political chaos and economic mismanagement, investors worldwide are moving their faith to assets that can't be printed or manipulated. Gold has climbed near $3,960 per ounce, the highest in history. Analysts at Goldman Sachs now target almost $4,900 by the end of 2026, while HSBC expects it to cross $4,000 within weeks. The message is unmistakable. Trust in paper money, especially the US dollar, is fading fast. Behind the rush lies one force: uncertainty. As Washington stalls and debt fears mount, lower interest expectations give gold even more lift, since holding cash now means watching buying power vanish. Central banks from Asia to the Middle East are stockpiling bullion to shield themselves from dollar instability. Each crisis in Washington strengthens gold's appeal, turning it from a safe haven into a symbol of independence from America's financial disorder. Bitcoin is echoing that shift, only louder. In just days, it broke $125,000, setting fresh all-time highs. What once looked like a speculative bet has become a protest against the system itself. Even major institutions that once dismissed crypto are quietly buying in, not because they suddenly believe in its future, but because they no longer believe in the dollars. If momentum holds, both gold and Bitcoin could climb even higher before year-end, a global vote of no confidence in America's paper promise. Unfortunately, there is no end in sight for the economic situation of the U.S. Despite months of promises and loud declarations from Washington, America's economy is still stumbling under the weight of Trump's reckless decisions. The tariff war that was supposed to bring jobs and economic independence has instead drained investor confidence and pushed prices higher for ordinary Americans. The once mighty dollar, which symbolized global stability, is now facing one of its most uncertain moments in decades. The so-called new tariff agreements are filled with confusion and political spin. Even Trump's deal with China, which he claims as a victory, remains incomplete and unclear. Beijing has not confirmed the terms, and major U.S. companies still report stalled shipments and uncertain pricing. Even the rare earth agreement with China is still unsettled, and without it, there cannot be a finalized trade deal. In truth, there is no stable framework, only vague promises and photo opportunities. As long as these economic battles remain unresolved, markets will keep trembling. Investors are hedging in gold, the yuan, and even the Australian dollar, bracing for what comes next. America's fiscal credibility is slipping, and every new policy announcement deepens the cracks. If clarity doesn't return soon, the dollar's decline won't just continue. It could accelerate into a full-blown collapse of confidence. The storm, it seems, has only just begun. The question now isn't whether Trump can fix it, it's whether anyone still believes America can. If you want to keep getting analysis like this, make sure you're subscribed and have the notification bell on. See you in the next one.